Hello friends, this is Raj Sastry from Raj Option Trading. Today is Feb 2022. I hope you're all having a good weekend. Let's look at a company called Masimo. They're into healthcare, medical instruments and supplies. As you can see here, they got various monitoring devices. They can monitor you at hospital, at home, everywhere. They also have a cloud platform where they can really look at some of these statistics and alert as needed. And their goal is to improve patient outcomes, reduce cost of care, and taking the non-invasive monitoring to new levels. So with that, let's jump in and get started. We'll take a look at company overview and look at competitive landscape and look at a few great companies in this space, review a few charts, do a deep dive on Masimo, and look at the financial performance, and also compare and rank Masimo, INMD, Abbott Lab, GMED, EW Life Sciences, ISRG, and so on and so forth. All my favorite stocks. And then we'll do a final verdict. Is it good to buy Masimo or should we wait? So with that, let's jump in. Look from a leadership perspective, we got CEO here, founder and chairman, Mr. Joe. I think he's doing great. He'd been CEO since 1989. That's a long time, as you can see here. He founded the company back in 1989. And look, he's got a very good approval rating. 87% of the employees approve the CEO. That's a very good rating. And as you look through here, he's an inventor and he's into modern pulse oximetry and a lot of innovation. So it looks like he's got enough background here. He can really take this company forward. And this company also has a lot of patents, as you can see here. So with that, let's jump in. Leadership checks out. I think this guy, Mr. Joe, he can take the company to the new levels. So now let's jump in and look at the company in little more details. Look, Masimo corporations, they develop, manufacture, and market non-invasive monitoring technologies. And they can do that in the hospital, at home, everywhere. It's a worldwide company. And they got various things going on here. They got extraction technology, signal extraction technology. And they also have a platform, as you can see here, Masimo Rainbow Set platform. And they got various things going on. Looks like in the monitoring area, these guys are leaders. And market cap after this huge big drop is still $8.54 billion. And look at the stock chart here. Stock has been doing very well. I think the 2020 was a great year for them, and then they also did well. But now look, there's a huge big drop here. This is a big drop. So at these levels, we should see if it's worth buying. As you see here, look, if I draw a line here, they're nice at the support level here. I can make a case for this company at these levels here. And look, from a price perspective, right now they are at $154 per share, and stock is slowly going up after the huge big drop. That's a good sign here. Look, they're almost at 52-week low, as you can see here, and analysts are predicting a moderate buy for this company at this time. We got 2 buy rating and 2 hold rating. That's why it's a moderate buy. Look, we got an analyst here from Needham, Mr. I think it's Tom, if I'm not wrong. So he basically said, hey, it's Masimo crazy like a fox to spend $1.3 billion on Sound United. And then afterwards, he came back and said, you know what, it's a buy. So initially, he was very negative on this company. Then later, he went and upgraded the stock to say it's a buy with a 205 target. Look, right now, stock price is at 154. Target price is 205. That's a good price increase from the current levels. And stock slid big time. Look here, stock came down 35% after unveiling $1 billion acquisition of Sound United. And look, stock is down big time, and folks are really debating back and forth. Is it a good one? Is it a good acquisition? They're paying $1 billion. Is it worth buying this company? We'll go and look at some details and really see if it's worth buying Masimo after the huge big acquisition here. All right. You might wonder, what is this Masimo company? I don't get it. Look, they got a nice platform here. If you want to monitor the patients, they got nice device here. They can monitor. They got a connectivity platform. It's also a software play, as you can see here. And you might want to you can put on some device. You can be at home, but doctors can monitor you wherever you are. You can be at home, at work, at hospital, wherever you are. They can monitor you with these sensors, as you can see here. And they got COVID solutions. You can monitor the patients and understand if there is a support surge. You can monitor the capacity monitoring in the hospitals, and you can look at this whole clinician safety here. And you can also look at blood supplies, as you can see here. And for the consumers, if you're a consumer, you could buy various of their technologies here. There's a continuous thermometer. You can just wear this, and it will monitor you continuously and see if you have a fever, you got some condition. And they can monitor your sleep and alert you through your cell phone. They got here Mighty Sat here. They can look at your they can monitor the health. And they got various of this opioid as an example. They can monitor that too. And they got various devices. As you see here, they got two main areas. One is for the hospital. If you're a doctor, if you're a healthcare system, you need these solutions on the top here. But if you're a consumer, you want these solutions at the bottom here. So what they're doing right now is buying Sound United, which is very good in the audio technology, and they can basically add them to this whole consumer segment and get a good exposure on the consumer side and leverage the existing distributors and retail shops and sell and cross sell more of Masimo devices and Sound United devices, and also look at the technology and really make sure they can take advantage of Sound United technology in their own devices. As you can see here, that's the very good value add. I can see the value add there. So with that, let's jump in and look at a little more details. Look, whether you are at hospital or at home, Masimo has got technologies. They got devices, they got software, they got cloud-based technologies. They can monitor you and make sure you're okay at the hospital, at home, on the go, wherever you are. That's the beauty of this company. They're just getting started on the Masimo home and on the go side. That's where this acquisition can really help them. And now you might wonder, hey, how is the quarterly result? From a quarterly result perspective, company did very well. Look, product revenue increased from 2020. We got 295 million to 2021. 328 million, 11.5% jump in the product revenue. That's a great year. And from an operating margin, they did very well. I like when companies increase operating margin. That's what is going on. Earnings per share, they did very well. So look, company did very well. And only reason they got stock got tumbled is because of this Sound United acquisition. And now let's look at the company here. What is this Sound United? Why does it matter? Look, Sound United is it's a very good. They got a very good recognized brand. They are a premium consumer technology leader, and they got various. They have a software platform. They got various devices, as you can see here. They got iconic brand. They got Danone here. They got Bowers and Wilkins and various brands, as you can see here. And they got various good blue chip customer relationships. They work with Amazon, Costco, Best Buy. This is where the Masimo is after. They want to take advantage of these premium brands and take advantage of their technology and sprinkle them into Masimo also. So that way it's a cross engineering between Sound United and Masimo. At the same time, they want to take advantage of this whole relationship they have with various partners and sell Masimo also in these outlets and go from there. And look, Sound United, the purchase price is about 1.25 billion. That's how much Masimo is paying. They got, look, around $0.9 billion revenue already. So it's not a huge price to pay. I think it's, can be justifiable if they really integrate this very well. and they're growing double-digit revenue growth. That's a good story here, and they got some long-term growth also, and they're in 20,000 points of retail and install distribution. So this is what Masimo is looking for. They want that exposure into all these retail and distribution areas, and also leverage their technology in Masimo's products. So with that, let's jump in. Look, you might wonder what is Sound United, what are they selling? Look, they got various things going on here. Sound United sells noise cancelling earbuds, as you can see here. They got this AV receiver, voice control, and they got a speaker system, as you see here, and they got AV receiver again, and a nice looking headset. So really, they are into audio. They're mastering this audio speaker type areas. This is where Masimo can leverage their leadership in this area and go from there. So with that, let's go in and look at a little more detail. Look, Masimo dropped a little bit. Right now, stock is in a buy territory. As you can see here, analysts are saying buy this company here. And look, from a price target perspective, we got a high target of 295 and a low target of 200. Both are above the current price. And right now, as we speak, it's got a sell rating. From a technical level, it's sell, but from a fundamental level, from an analyst, it's a buy rating. So I would take advantage of this huge, big sell-off, and I would buy some Masimo Technologies. It's a great company. I'm sure they will do very well. They got a committed founder and CEO at the helm. I think they're going to do very well. So with that, let's look at Masimo and look at the competitive landscape. I love these medical device companies. They've been doing very well in the past. Look, we got a set of companies here. Top of the list, this is sorted by market cap. You got the market leader here, Thermo Fisher. I love this company. If you don't have this Thermo Fisher in your portfolio, I say buy some Thermo Fisher. It's a great company. Add slowly to your portfolio. And then you got a few more, as you see here. We got Abbott Lab, Thermo Fisher. Before you finish on Thermo Fisher, look, they got $39 billion sales, and 5-year sales growth is 16%. That's a very good. Even 1 year, that's a very nice sales growth, as you can see here. Quarter over quarter, also nice sales growth, as you see here. Nice gross margin. Company is making money. Nice net margin, and they have very low debt ratio. I love it. Current ratio is great. They can sustain this whole downturn. Stock is sold off. Look at the RSI for Thermo Fisher. You're almost you're almost getting it for a very, very low price here. I would take advantage of this one here. And look, from a future perspective, nice growth here. They got nice revenue growth for next year from an EPS perspective as well as revenue perspective. Very good Altman Z score and also overall score. Stock has been down, as you can see here, in 1 day, 5 day, 1 month, 6 month, and stock has done great in 2 year and 5 year. I would take advantage and buy some Thermo Fisher here and go from there. And then you got Abbott Lab, one of my favorite here in the medical device area. They got various COVID tests, as you might be knowing. Look, this is also a nice overall score of 96 here. Stock is sold off. Look at the RSI here. And nice net margin. Look at all these companies. Look at the net margin here. Many of the companies are net margin positive. That's why I would go after these companies. And you could also look at many other companies here. I love ISRG, as many of you might be knowing already. Look at the net margin in ISRG. Great net margin here. And look at the RSI. Stock is sold off here below 50. And keep watching the net margin as usual. We got Edward Life Sciences. It's one of my favorite. Again, nice net margin. Stock is sold off. You could buy Edward Life Science. Look at the 5-year performance. It's great. And for the future, nice EPS growth and revenue growth for the future here. I would be buying this one also. Then as you scan through here, keep watching the net margin here. We got great net margin here. Illumina, it's again one of my favorites. It's into human genome and gene sequencing, as many of you know here. Great company, and it's done great in 5 years, as you can see here. And as you scan through here, keep watching the net margin here. We got nice companies here. PHG, it also has a great net margin. And we got here HOLX, Hologic, nice net margin. 31%. You could buy that one too here. And with that, let's look at a few more companies here and go from there. Look, we got a few more companies as usual, and keep watching the net margin. These companies are minting money as we speak here. And Masimo is right here, as you can see here. I highlighted that for you here. Masimo, as you see here, it's doing nicely. Net margin is around 3. Net margin is very good here, 19%. I would take advantage and buy some Masimo. And as you see here, Masimo, look, they got nice future expectation here, 14% revenue growth and 8.8%, 14% EPS growth and 8.8% revenue growth. Nice overall score. I would take advantage of this one and buy. And you got few more. I love stocks like Tandem. It's a good one here. There is a lot of diabetics indications in the market and in the world. This company can also do very well. And we got a few more. Look at InMode here. It's stuck in the bottom here. It's also a good company. You could take advantage of InMode. Look at the net margin of InMode here, 46%. It's one of the highest net margin, along with the QDEL here. QDEL also has a nice net margin, 47%, as you see here. You could take advantage, buy some of these companies, and go from there. So with that, let's now jump in and look at few charts. From a chart perspective, look, we got Thermo Fisher, great company, and stock has been dropping off late. I'm slowly adding to my position here. This company will do very well last time. You don't need to buy 100, 200. Whenever it drops, take advantage. Buy 5, 10, 15 and keep adding. That's the way to go, because market can go. Nobody knows when it will stop, but it's good to slowly add to your position and buy 5, 10 and go from there. And then we got Danaher, one of my favorite again. Look, stock is dropping off late, and look, it's a great company. I'm also buying this one too. Then you got Dexcom. It's again a leader in the diabetics area here. Continuous glucose monitoring. Stock is all dropping, as you can see here. It's a great one to buy slowly. Buy a couple of them here and there. Then you got Tandem. It's a competitor to Dexcom. If you had to choose one, I would go with probably Dexcom here. It's a solid player in this area. All right, then we got a few more here. We got Masimo Technologies. Masimo stock tanked big time. Look at the gap down here, huge big gap down. And look, on the balance volume came down. Now it's going higher. Stock is slowly making its way higher. Last 2 days after the drop, it went higher. That's a good sign. Stock is bouncing. I'm a buyer at these levels here. I will be accumulating Masimo from here onwards. And then you got InMode. InMode has been dropping off and off here. Nice on the balance volume. It's a good long-term play. If you can take some short-term pain, keep accumulating InMode. They will also do very well. And then you got Abbott Labs. It's again a leader in the COVID testing, as many of you know here. Stock is dropping off. It's good to slowly buy some Abbott, and this will do very, very well in the future. GMED, same story. Stock is dropping off, as you see here. Nice bounce off late. I would be buying some GMED also here. And then you got a few more. My favorites are really, I like Edward Life Sciences. Very, very solid company, as many of you know here. I would be a buyer of Edward Life Sciences. Then you got Stryker. Stryker is a good company. Look at the heartbeat in the company. Goes up, comes down, goes up, comes down, goes up. It's a very predictable pattern here. If you want to do some short-term trading, you could do with this one. It's a good swing trading stock, as you see here. At these levels, you could slowly buy some Stryker, and this will do very well. And then you got ISRG. This is one of my long-term holding. You could buy some ISRG here. These guys also will do very well. And then you got Bruker. It's also a great company here. Look, huge drop here. Stock is trying to go higher. On the balance volume is go higher. You could buy some Bruker here. All right. Now let's look at Masimo and do a deep dive. Look, let's quickly look at market data here. Masimo Technologies, IPO back in 2007, as you can see here, and this kind of trades along with the S&P 500, 0.81, a little bit lower volatility, as you can see here. It's a good one. Trades along with the S&P 500 for most part. Current price is 154, and 52-week target. Target price for next 12 months is 324. That's a good price increase from current levels here, almost more than double, as you can see here. And then you got your nice volume. It's a nice volume here, and relative volume is huge. Looks like people are taking advantage at these levels and buying Masimo. And look, they got nice net margin here. Net margin is 19%, and there is a nice sales growth year over year. That's also good. 5-year sales growth is also positive. It's a growth company, as you can see here. Nice EBITDA margin, and they got P ratio is pretty much okay, no problem. And it's a company making money. They got earnings, as you can see here. And look, from an EPS as well as revenue perspective for next year, the expectation is higher, so their analysts are expecting nice growth for this company for next year. And from a price to sales perspective, stock is cheap, and price to earning also is okay, not too bad. And they do have a lot of money, $745 million, and free cash flow positive. I like it. Quick ratio is 4.1. That tells you they can very easily take care of their short-term obligations, and also current ratio is also high. It's also good. They have enough money. And look, it's a money-making company. Both return on asset and equity both are double digits here, and our return on investment is also good. It's a money-making company. And from a performance perspective, look, it's a bloodbath here. Drop in 5-day, 33%. Drop in 10-day, 30%. Drop in 1 year, 32%. After this huge big drop here, even with this drop, look, 10 years they've done great, 623%. It's a good one. It's a keeper. And RSI perspective, stock is sold off, as you can see here. And look, from a Morningstar health perspective, they're great financially, good B grade in the growth level, and profitability is a grade D, which is not too bad. They got a lot of money. Altman Z score is good, financially stable. And it's a growing company. Piotrowski F score 6. That tells you consistently the books are great, financials are great consistently for past few years. And they got low valuation right now, and industry growth rank is 2. That tells you they're growing more better than the industry here, and profitability is also okay. It's number 3 here, which is not too bad. Overall company's background checks out here. That's why I think it's slowly good to buy some Masimo here and build a nice position, and brace yourself for a nice bounce back. All right, now let's look at numbers. From a numbers perspective, earnings per share is an increase. I mean, it's a slight decrease, as you can see here. But normally, what we do is we'll also look at the quarterly earnings per share. But it's a money-making company, as you can see here. And from an annual sales perspective, look, it's a nice clip here. I like annual sales going higher. That's a good one here. And they're controlling the share dilution, not too much at all. Look, it's slightly increased, but this is okay. I can take this anytime. From a quarterly revenue perspective, nice trajectory here. Quarterly revenue is increasing. That's the way to go. And they're spending money on R&D consistently. That's required in this area. And net income is growing nicely, as you can see here. That's also good. From a numbers perspective, it checks out. EPS growth, I think this can be slightly higher, but I think it's okay. It's a positive, nice EPS growth. Now let's look at quarterly numbers here. From a quarterly numbers perspective, right now after this huge big drop, stock price is about 154, as you can see here. And as you see here, it was 148 back in 2019. Even after this drop, I think stock price is higher than back in 2019. Look at the market cap, 1231, 2021, 16 billion. After this huge haircut, now it's 8 billion. So its stock price almost cut in half here. That's why it's the company is doing well. That's why it's a good buying opportunity here. Look, from a stock performance perspective, since 1231, just 2 months ago, stock dropped 47% after this huge big news of acquisition of Sound United. And look, from a sales perspective, I like it. Sales increased from last quarter sequentially, and sales, there is a nice sales growth. This company is really surprising Wall Street with the positive sales estimates here. Look, consistently they're giving positive surprise on the sales. It's always good. Wall Street likes the revenue growth, and this company is giving it to them. From an EPS perspective, also look here. Every quarter, they've been surprising the Wall Street with the EPS surprise exceeding the EPS estimate. That's also great here. and they're improving their cash situation. They're going from 623 to 652 to 745. They're decreasing their debt. That's also good. And they don't have any debt. It's very low debt. It's almost zero all the time. And free cash flow, as you see here, it's increased. That's good. And all the boxes are checking here. Operating cash flow is increasing. Gross margin came down slightly, which is not great, but it's not too big drop. Operating margin increased, as you can see here. Net margin increased. That's good. R&D is pretty consistent around the low 30s. That's also good here. ROI, which is slightly decreased, but overall it's a good story here. I think I would be a buyer. There is not too much negative at all here, except for this huge big drop in stock price after the Sound United acquisition. So overall, from a quarterly number perspective, company checks out, thumbs up. And now let's look at the performance. I always look at the performance to make sure I look at this company clearly. Look, I got this performance here all the way from 2007 when the company became IPO to current. Look, stock has been chugging along pretty nicely. At least last couple of years, as you see here, stock has been doing great. And now there is a huge big drop here. And look, I love the companies which have got heartbeat. Look here, we got stock price here. Year open 265, year high 303, year low 208. As you can see, that's a good heartbeat for this company. Stock moves up and down nicely. That's when you can take advantage of this huge big drop here. And stock bounces back by looking at this in the high, low, and close and average. That's why you could buy. Look, this company is not new to the drops here. Look at 2011 here. Stock had a huge big drop, as you can see here, 35%. Stock came back again. Look at 2008 during those financial crisis, 24% drop. This is something similar. I would not worry too much. I would be a buyer here. And look, huge big drop on 16th after the acquisition news, after the earnings. Look, stock is bouncing along. Went higher in the next 2 days. That's a good sign here. And volume is also pretty okay here. Look, before the earnings, volume was very low, but after the earnings, huge drop here. Huge increase in the volume, and the volume is above $1 million. Stock is going higher. That tells you stock is bouncing off from these levels. I think we should be buying this company here. All right, now the analysts. Look, we got here Needham. Needham is upgrading this company at these levels here from hold to buy. $205 target, which is much higher than the current price, which is around 154 or so. And we got a downgrade from Piper back in 16 here. And look at the price target, 200. That's also above the current price, which is good here. These are other things are old ratings. We can almost ignore them for now. So with that, let's jump in here and look at the stock chart here. Look, Masimo Technologies. Look at the stock run. Stock has been running nicely. Now look at the drop. It's a weekly 5-year chart. Huge big drop here. And that's why we got to take a look at this company. So this is a 5-year weekly chart. Now let's go a little more into detail. Look at the 2-year 1-day chart. Look at the 2-year 1-day chart here. Company has been doing great back in 2020. As you can see here, went up nicely. There's a drop in 2021. As you can see here, dip in say May-June time frame here. Then stock went higher. Now the huge big drop here and gap down. And look, it's trying to go higher after the huge drop here. So at these levels, I think it's a good one to buy. And look at the quarterly earnings here. Earnings somewhere here. Stock shot higher. Earnings over here. Stock kind of went higher, as you can see here. One more earning. Stock went higher again. Earnings over here. Stock went higher. And this company normally does well because they always beat the estimate. That's why stock goes higher after the quarterly earnings. This time this time and even last time to some extent it went higher. This time it's an exception, as you can see here, because of the Sound United acquisition. Analysts did not like it. They're wondering why the hell this medical device company buy a consumer electronic type company? That's why stock came tumbling down. They did not put all the pieces together, and they did not understand the synergy. So with that, let's go into a little more detail and look at one-day chart, look at a few technical. From a technical perspective, look, stock came down, as you can see here, after the earnings. And now look, RSI, after dropping below this 30 line, now it's trying to go higher. So momentum is increasing now. That's why you should be looking at buying this company. Look, Masimo, IV percentile is 70. At these levels, you could also buy some put option below the current price. Look, high IV percentile means you could make some money selling some put option. That's a good one to approach here. Typically, when the stock drops like this, the risk is already factored in. You can safely sell some put options. Don't overdo it, but you can do slowly. And then we got here on the DMI chart, completely bearish. Red line is going higher, blue line going down here, but this situation will change slowly. And then you got volume average. Look, folks are buying the stock right now after understanding the acquisition. Stock is going higher. Smart money is, look here, they're coming down here. I can see this also turning around and going higher. That's why at these levels, even though its chart looks ugly, jump in and buy some stock, you'll do very well. Next, let's look at option chain here and see what options are telling us. Look, from a current stock price 154 and 52-week high 305. There's a lot of good room to run here. And at 155, we got 10 open interest here, call options. And even at 200, we got 17 open interest. I should tell you, I've seen, much higher open interest in the stocks. This one is not a folks are not too keen in buying options. This is not a very active in the options market. That's why instead of trading options, unless you want to sell some put option, you stay with the stock itself. I say buy some stock at this time. There's no point in buying options, but either way, as you look through here, look, we got here call option and call option open interest here, and keep watching the put option open interest here. That's somewhere right here. And now let's look at the put call ratio. So let's go down here and look at put call ratio. So from a put call ratio perspective, it's 1.01. So what's going on is folks are hedging on both sides. They're buying call option, 669 contracts sold here or traded, and they got put options here 674. That makes the put side a little higher. So what this tells is folks are really hedging and buying equally on the call side as well as put side. That's why right now in the options market, there is no preference either on the buy side or the sell side. All right, now let's compare a few of these stocks here, all my favorites. Let's see what should be, how are they ranking. From a ranking perspective, we look at Masimo, INMD, Abbott Lab, GMED, EW, Life Sciences, ISRG, so on and so forth. As usual, keep watching the net margin, one of my favorite metric to watch, especially off late. From a net margin perspective, look, we got here highest net margin in these candidates here is EW Life Sciences or actually ISRG, which is 29%. If you don't have some ISRG, I say go buy some ISRG. Actually, I say InMode has got even higher, 51%. And InMode first here, then we got ISRG, and then look here, you got Edward Life Sciences, very good here, and then you got other stocks like GMED and so on and so forth. And then you can look at the valuation. You can look at both PS ratio as well as PE ratio here. And look, ISRG has got a little bit higher PE ratio, which is by design, but PS ratio is low. I like this company. You could buy this company also. Next, you could look at relative strength index. Look, all these stocks are sold off for most part. Maybe BDX is middle of the road here, but otherwise all these stocks have sold off nicely. Then you can look at the expectation for next year. All these stocks have got nice expectation for next year, so no issues. And then I always look at Altman Z score to really see do the companies have what it takes when it comes to financials. All these stocks checks out, maybe with the exception of BDX here, a little bit, not so great, but not bad also. And then I look at the Pietrowski F score. This tells me from a book's financial perspective, Abbott Lab has got ship-shape financials here. Same story, GMED as well as Edward Life Sciences all get 8 here. And then you got Stryker gets 8 as well as BRKR gets a 8 here. The higher the better when it comes to Pietrowski F score. I would say these companies are doing great. And then I would look at Morningstar rating here, financial health, growth, and profitability. Many of these companies do very well. Then finally, we got a balanced scorecard here, which looks at various factors like valuation, profitability, financials. And in these stocks here, look, we got the highest rating here for Abbott Labs with a 96 score. I say that's a good one. I think it's a great score. If you don't have Abbott Lab, buy some Abbott Lab. And then we got here GMED. GMED has got overall score of 94. You can buy some GMED and take advantage here. And then you got a few more, Edward Life Sciences, which is one of my favorite. And also we got Medtronic. It's a beaten down for most part. You could take advantage and buy some Medtronic. So overall score, higher the better. And for Masimo, as you can see here, 77 is the overall score. You could take advantage and buy some Masimo also. Even INMD is not too bad. So that's the overall score perspective. Go with the higher the score, the better. And now let's look at what should I do with my Masimo. So I say the stock came down here, but look from an earning perspective, they got nice $376 million dollars revenue and up 11% year over year. And earnings, nice earnings here, earnings per share. The company beat both on the EPS as well as revenue perspective. That's a good one here. And look here, we got our famous analyst here from Needham, Mike Matson. He said after this huge big sell-off here, I think it's overdone at these levels, and the deal can prove to be a good one here. So I think now folks are realizing this could be a good one. The whole sell-off is overdone here. And look, this deal marries the medical technology player Masimo with privately held Sound United, which is manufacturer of consumer audio devices. And according to Masimo, the $1.025 billion buyout gives them a established distribution channel with major retailers. That's a good one here. And they can also do some cross-selling and take advantage of the cross engineering type technologies. And the CEO and the founder defended the reasoning behind the acquisition, and they want this cross leveraging of the technologies, which is a great one actually, and also leverage their their various partnerships. And they can also look at the United Premium Technologies here, Sound United Premium Technologies, and provide the services and also do automation using cloud-based technologies. So overall, stock market freaked out after Masimo bought Sound United. I say don't worry, it's a solid company. Mr. Joe Chiani, he's the founder and CEO at the helm. He knows what he's doing. He wants to slowly branch into consumer side of the electronics and make sure all the Masimo devices are sold to the consumer through this established channel, and also take advantage of all the audio technologies that Sound United has and sprinkle them into Masimo and make it a juggernaut when it comes to both consumer side as well as the hospital side. With that, I recommend buying the stock up here, and I think it's a good one. So with that, thank you very much. Happy investing and trading. Please subscribe.